Well, I had mentioned either in yesterday's video at the end, but certainly I mentioned it in the description of the video that if you didn't see it, please go back and check it out from yesterday afternoon, where we had a continuing sell-off in the stock market. But the comment I made was that if today's CPI report came in better than expected, or softer, or cooler than expected, that this could underpin the stock prices and maybe curb the sell-off. But on the other hand, if the numbers came in higher than expected or worse, that would potentially fuel a continued sell-off in the market. So it was whether or not today's CPI report was going to be enough of a silver lining to kind of stem the bloodshed in the markets. So we get the CPI report today. I'll share with you just the data based upon the CNBC article, which I saw this morning. And it says inflation rate hits 2.8% in February, less than expected. It says prices for goods and services moved up less than expected in February, providing some relief as consumers and businesses worry about the looming impact tariffs might have on inflation, the Bureau of Labor Statistics reported Wednesday. So now, as you see, the narrative has changed from the tariffs causing or impacting inflation, as opposed to what's been transpiring over the past 12 months or more with regard to out-of-control inflation. But I won't go down that rabbit hole. You guys can think for yourselves on that. I'm sure everybody has a different opinion. It says the Consumer Price Index, a wide-ranging measure of costs across the U.S. economy, ticked up a seasonally adjusted 0.2% for the month, putting the annual inflation rate at 2.8%, according to the Labor Department agency. The all-item CPI had increased 0.5% in January. So again, this is the government statistics that I'm talking about here, putting the annual inflation rate at 2.8%. Again, stick with me. I'm going to talk about or share with you a small interview I saw out of Marketplace, which discusses the massive disconnect between what people are feeling every day and what this statistics and what this government data shows. The article says, excluding food and energy prices, the core CPI also rose 0.2% on the month and was at 3.1% on a 12-month basis. The core CPI had climbed 0.4%, it says, in January. Again, they're saying that core CPI is 3.1% on an annualized basis. Again, leave your thoughts, comments, input. Do you guys believe that inflation is 3.1%? Economists surveyed by Dow Jones had been looking for 0.3% increase on both the headline and the core inflation numbers, with respective annual rates of 2.9% and 3.2%, meaning that all of the rates came in were 0.1 percentage point less than expected. So the data, the government data shows or portrays that inflation overall is cooling, is coming down. Stick with me. Stock market futures added to gains after the release of the report, which was 5:30 a.m. Markets open 6:30 a.m. West Coast time. So stocks, by the way, did come out of the gates roaring higher. Dow was up hundreds of points, I think at 300 points or something. And I would have thought, based upon this report, that they would have kept that momentum. But throughout the day, additional information came in where Canada put something out about some tariffs on U.S. goods, and we still have the uncertainty with regard to the Ukraine-Russia situation. The EU came out, indicated they were going to be fighting back against the tariffs as well. So anyway, throughout the day, the Dow Jones gave back all the gains, closed down 82 points. S&P squeaked out a 27-point gain, and the NASDAQ actually finished up higher, 212 points, 1.22%. But if you go back and look over the past 10 or 12 trading days, what the NASDAQ has lost, I think it's well over 10%. If I'm misspeaking, let me know. So NASDAQ, at least today, did not even make a dent in getting back what it's lost over the past week and a half or so. But listen to these statistics now about the report. Shelter costs moved up 0.3%, less in January, but still responsible for about half of the monthly increase in the CPI, the BLS said. Says the category makes up more than 1/3 of the total weighting in the CPI, with particular focus on a measure in what homeowners estimate they could get in rent for their properties, which also increased 0.3%. Food and energy, okay, bells, whistles, food and energy indexes both increased 0.2%. Used vehicle prices jumped 0.9% and apparel rose 0.6%. Within food, egg prices soared another 10.4%, taking the 12-month increase to 58.8% and pushing a broader measure that also includes meat, poultry, and fish up 7.7% on the year. Beef prices also climbed 2.4% in February. Motor vehicle insurance posted a 0.3% increase on the month and was up 11.1% annually. However, airline fares slipped 4% in February and were down 0.7% from a year ago. We discussed on yesterday's show the fact that Delta Airlines came out with terrible guidance. Their stock tanked yesterday, and based upon they're saying weak consumer demand. Okay, so what's happening here? The cost of everything that we all need, food, motor vehicle insurance, meat. Okay, I said food, but meat, poultry, fish, eggs, all this stuff is higher. So Delta Airlines came out yesterday and said, look, we're having a tough time. That's because the consumers are tapped out. All right, not to be redundant from a whole lot of shows over the past year and a half, but it's progressively getting worse and worse. And we discuss oftentimes this disconnect between Wall Street and Main Street and what the government data shows or tries to portray or tries to spin and what, everyday people are feeling and experiencing. I saw an article today, actually it was about 2 days old, but I saw it this morning. I thought it played into this theme. And it's from Marketplace Morning Report. And it was an interview format. It was a question and answer. But I thought it was very appropriate to kind of put in context what I think many of you guys are feeling and expressing relative to the fact that you're not seeing a reprieve in costs in things that you need each and every day. You're struggling to put food on the table. You're struggling to pay for vehicle expenses, medical costs, and all that stuff. Okay, so I wanted to say I hear you. I read the comments, and I thought these comments were important to explain it. So it says Gene Ludwig is chair of the Ludwig Institute for Shared Economic Prosperity and former U.S. comptroller of the currency. He's also the author of The Vanishing American Dream, a frank look at the economic realities facing low and middle income Americans. He joined Marketplace Morning Report host David Brancaccio to discuss what's behind the disconnect between the economic data and how people actually are experiencing the economy. The following is an edited transcript of their conversation. I'm just going to cover a couple of the question answers. David, the interviewer, says people's lived experience tells us that the economy needs work. Yet I end up reporting a lot of the headline economic numbers have been saying things are actually okay. Maybe we should stop whining. And he says, how do you resolve the great divide over numbers versus what we see with our own eyes? And Ludwig says, we started looking at this back, about 5 or 6 years ago when we held a symposium to question why things felt so bad for middle and low income Americans. But at the time, the headline statistics were looking pretty good. He said, so I decided with the Institute to begin to study the numbers and try to figure out why the folks at the symposium and my own experience growing up in a small town in Pennsylvania and seeing it deteriorate, why this is, or why this disconnect is there between the headline numbers, like I just shared with you from CNBC, and what we're experiencing. The interviewer says some of it is we do the monthly unemployment rate. And he phrased these questions horribly. I mean, reading the way he said the questions, they're almost unintelligible. But he says it is a crucial piece of data, but the headline one does not account for people who are so discouraged by the job market that they quit looking sometimes. The payroll count that the Labor Department does, he says, yeah, look at all these people who got jobs this month, but maybe they were working multiple jobs, right? Ludwig responds a little bit more eloquently. He says, well, all that is absolutely true, but sadly, it's even worse than that. What it doesn't account for is people who have a piece of a job. They work for an hour or two here and there, but they want a full-time job. It doesn't account for that. If they worked 1 hour in the last 2 weeks, they're counted as being employed, he says. That doesn't in any way suggest whether the person can earn even above a poverty wage. So unemployment, as we like to say it, functional unemployment, is really in the 20s, meaning in the 20% range, not 4.1%, as the government says. He says, which is absolutely horrifying. The interviewer says many orders of magnitude higher than the headline figure that they hand me every month when the unemployment rate comes up. And lastly, and I'll finish out, Ludwig says that's only one of the headline statistics that's misleading. And here we talk about, I'll close appropriately, it discusses the CPI, right, and inflation. He says the inflation rate is also misleading. CPI is what it's called, the Consumer Price Index, is a basket of 80,000 goods and services. But for middle and low income Americans, they use a relatively narrow group of that, they use a relatively narrow group that matters to them most, which is food, housing, education, transportation to work. Food, housing, education, transportation to work. He says if you look at the basic things that they can afford to buy, they have inflated over the last 20 years more rapidly than the CPI. So it says these people are worse off. And that's a big deal because it means that the net, their wages haven't increased over 20 years. For 60%, he says, of America, they've actually declined or been stagnant. So when you see the media come out with this data like this morning with the CPI and the headlines, look at this stuff intelligently. Obviously, do your own analysis. Don't take it at face value. Understand that for a lot of middle and lower income Americans in this country, it's not, as this article opened up for CNBC this morning, basically what it says is it says that consumers are feeling some relief. Are you guys feeling relief from inflation? All right. I'll leave it there today. I hope you, felt that this was something that was worth discussing and helpful. Thanks for watching. Thanks for supporting the channel, hitting that subscribe button. And I'll talk to you guys soon. Let's see what happens with the markets tomorrow. And there's a lot of uncertainty. All right. Bumpy road. Talk to you soon. Bye.